Let's talk about Balancer from this week's article on Brave New Coin. So the Balancer protocol is a few things. It's non-custodial portfolio management, it's automated market making, pooling, it's a pseudo inverse ETF type structure. All of the pools kind of talk to each other a little bit. I don't fully understand it, I'll just be honest. Right there, I mean, I learned about AMM stuff like a couple months ago and I'm still trying to grasp my head around that. But from my understanding, you're able to, instead of having a curated list of pools, create your own pool. So on Uniswap, for example, or 1inch, they'll have various pools which are 50-50 split. If you're familiar with the AMM pooling model, you put in 50% of each asset, and that in effect is used in the market making process. For Balancer, it can be 90-10, 80-20, 50-50. It can be whatever you want it to be. The pools can be private, they can be shared, they can be a mixture of the two. They have associated fees involved, where the fees are paid to the traders rather than paying fees to a portfolio manager. So BAL has an associated, or the Balancer protocol has an associated governance token because of course it does. Everything in DeFi has to have a governance token. Now that's my one gripe with all of this stuff. At the end of the day, most of these governance tokens aren't going to be worth anything when the speculation cools off because nobody's going to care. So this is a classic case of, I love the protocol, I love where they're going, I love what they're doing, I love that they're raising more money, but why do we need a token, guys? Why do we need a token? I just don't understand, because what people are doing is they're using, in my opinion, they're using Balancer as a proxy for the value of the protocol, when there's Balancer Labs, the company, and there's Balancer, BAL, the token. And it's just like, why? Why do we have to get this into the mix? So that's my one gripe with everything that has a governance token, ZRX maker, blah, 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 blah. Now, some of these have revenue share, some of these are definitely securities, some of these have burning and other mechanics that put them in the security bucket. So they're dubious under US regulatory laws. So there's some issues there, perhaps down the line, maybe a couple of years from now, where SEC or whoever is going to go after this stuff. That doesn't mean it's right or it should happen. It just is an overhang, right? It's like the Ripple stuff. For years and years and years, we talked about regulatory concerns, and then it happened, and it happened, it got delisted everywhere, and look at where Ripple is today. So that's my one concern with all these governance tokens. Not just Balancer, it's 1inch, it's Curve, it's Uniswap, Sushi, ZRX, Maker, all this stuff. All right, that's enough about my own reserves about governance token, but it's a slick interface. It's a very cool UI. You connect your MetaMask, the classic DeFi stuff. If you look at the total USD locked, this is BTC, ETH, and DAI. It is broken $1 billion. It's 9th on the list of DeFi Pulse. It's kind of crazy that $1 billion is 9th, but people are definitely using it. It's exploding in growth. It's becoming popular. I mean, this is what you want to see with anything, right? You don't want to build an empty cathedral. You want to build something that people want to use and are excited to use and have incentives to use. And that's what the Balancer token in effect is doing, is it's incentivizing liquidity mining, it's incentivizing liquidity staking. All that is fine, love it. But again, it's a governance token, which at the end of the day, probably not worth much. Especially when, from what I could tell, there aren't really many governance votes that are happening currently. I mean, if you look at across all these platforms, it's the same thing. It's usually a few people with a lot of the governance token who are voting, and then most people just don't care. That's just, I mean, that's how it is in the real world too, really, in the United States especially. Most people just don't vote, right? Unless there's something important to vote on. So TVL increasing, super bullish. Transaction counts, if we look at the BAL token, transaction counts are just kind of stagnant over the past year. I mean, there's really nothing. It was just released in March, April, May, June, somewhere in there, and then it got distributed. So it hasn't really picked up as far as transaction counts, nor would I expect it to, especially with ETH fees the way they are. There aren't going to be a lot of people just like moving Balancer tokens around because it's just too expensive. You can see average transaction sizes increasing, and I think that's a big function of ETH fees, which are ballooning to epic proportions. If you look at NVT and active addresses, NVT can't really, I mean, the thing about NVT, I don't use NVT in my own trading, first of all, anyway, and even on Bitcoin, but with this other stuff where they've created a bunch of tokens. They have them in a bunch of wallets. They're moving a bunch of vested tokens around, all this stuff, yada, yada, yada. That's all going to influence NVT kind of falsely. It's going to give you a false sense of increased on-chain activity, right? So even looking at this for Balancer is kind of silly, but I like to look at all of these for all these tokens because you can at least compare it to itself since it got released, right? Like, what is the on-chain activity relative to a couple months ago? So this is telling you that on-chain activity versus market cap, on-chain activity has increased relative to market cap, so therefore NVT is suggesting it is underpriced relative to on-chain activity. And again, if we look at the mean transaction sizes, those are increasing. So if market cap stays the same or increases slower than on-chain activity, NVT will decrease. So that's gives you a bullish picture. Active addresses since November have stabilized and are slowly increasing. So I would consider that bullish, but again, this is not, if you compare this to other stuff, that other on-chain governance tokens, Sushi, Uni, all this other stuff, that active address picture is going to look a lot different. This is going to look different because there's staking and all this other stuff going on. So you can't exactly compare these one-to-one. It's very much, what is this chain doing? What is this token doing for Balancer protocol? You can't just compare these head-to-head. But if I see active addresses increasing, if I see NVT decreasing month over month, I can say, okay, there's bullish vibes here, right? Even though there might be a whole bunch of caveats with all of this, at the very least, you can say, all right, this is probably pretty bullish. If we look at technicals for Balancer USD on the 4-hour, can't really look at anything higher because there isn't that much trading data yet. So we had this classic head and shoulders, broke down. Coins are being distributed, coins are being sold from the early investors, that sort of thing. This is classic like airdrop style charting where price just falls, dies off. Eventually sellers are done selling. Price reaches an equilibrium, consolidation, and bullish rally as more people who weren't early investors get involved in some way. So we had this 5200 cross late December. We tapped the 200 a couple times-ish. And January 11th was a big down day across all DeFi. And since then, it's just been Moon City really across all the DeFi tokens. So it's hard to know, like, okay, how good is Uni, Sushi, Balancer, blah, blah, blah. How good are all these tokens relative to each other when the whole sector is just lifting off, right? Because if you look at all these governance tokens, they're just straight mega moon, So I don't know how much of this is just Balancer being amazing, awesome, or how much of this is just people just going buck wild on DeFi governance token type stuff. Nonetheless, obviously bullish, above the 50, above the 200. I like support at like 34, 30 as well. I'll show in a few seconds. It's a really big level. 20 to 26 pivot, 200-day or 200 period moving average, and really all the volume supports around 20 to 23. No bear div yet. We didn't get a higher high here. On the way up, I like 46, 56, 65, whatever these monthly pivots are. If you look at the cloud, we had, despite extremely volatile market conditions, bull signal here, closure long, re-long, closure long, re-long somewhere in here, and off to the races it goes. I said this on another video, but if you just assume all of these long entry signals are going to be an amazing trade, that's how you have to react, really. Because even in the trades that aren't so amazing, the ones that are pay off tenfold, right? Because, this is obviously a mess and kind of went nowhere, just sort of consolidated all over the place. But going from 20 to 40, that's a 2x, right? So if you're in for that, even though you got perhaps chopped up a little bit between January and 11th to January 25th, it makes it all worth it. If you're in from 11 to 22, right, that's a 2x. It makes all the chop worth it. So cloud signals, even on the 4-hour, quite noisy, but working as intended. Right now I like 34, 33 as a Kijun support level. And if not, we're going to see like 36 to 30 edge to edge move right here. Pretty thick cloud. Starting to consolidate, starting to slow down. So it's almost decision time pretty soon. It's either going to be up or down, right? You get a consolidation. Is it bullish? Is it bearish? Do we have some sort of bias going to that? Do we have some sort of short setup on the cloud? Is the other thing I watch. So if this starts to break down below 36, I would expect a touch of 30. And then lastly, on the Balancer BTC chart on the 4-hour, just, first of all, amazing looking trend, bearish trend, right? Just this is what you want to see. just days and days and days of death. You don't want to be in and out of these positions if you're a trend trader like me, worried about, is this trend for real? How long is it going to last? When I see massive trends like this, I get confident in trading a trend, especially the trade entries, because I can just set it and forget it and walk away, right? Again, you have your classic head and shoulders here, and broke down, attempted to reconsolidate, broke down again. Now we have this bull trend above the cloud pretty clearly, multiple days, tapped the 200, and as it sits right now, it's super neutral. Tons of VPVR stuff in this zone, down to 58k sats, up above 100k sats, so massive range here. And it's maybe setting up for a big macro inverted head and shoulders, and you can see it starting there. So I think I said in the article I like 140,000 sats because of the R3, because of the volume profile, sort of because of kind of this second leg down on the head and shoulders. So overall, it's early days for all these automated market making tools. Balancer is kind of unique in that it has variable weighted fees, tokens, all that sort of stuff, kind of plug and play, do whatever you want. Sandbox. I'm not bullish long term on any governance token until they sort of prove their worth. So it's hard to be bullish on the token versus the protocol, which I think is great. Just like Aave and all these other ones, right? There's a billion governance tokens. Technicals for the USD pair are fairly bullish still. I'd watch for a breakdown from 36 to 30 or a support in the near term at 34. And the BTC pair could be setting up for a macro multi-month inverted head and shoulders with a target above 140,000 sats.